Jeremy Lefebvre's Tesla stock predictions are absolutely insane. Welcome back to Strongman Personal Finance. So Jeremy just put out a video called My Tesla Stock Projections for 2023 to 2027. Now Jeremy is kind of evolving his grift a little bit because he's doing projections now. He's got this fancy little Tesla base case chart, and he's got a bunch of numbers on it and percentages and assumptions that he just pulled out of his butt. Net income, PE ratios. It seems pretty sophisticated, right? I mean, it looks pretty sophisticated to me now, doesn't it? Well, let's dive into this a little bit more, okay? So Jeremy is laying out his Tesla base case scenario, all right? So when I imagine different scenarios, I imagine a bear case. You know, that's the worst case scenario. Tesla maybe only has 10% revenue growth for the next 5 years. Then we have the base case, which is like the middle ground. And then we have the high case, the upper case, the bullish case, whatever you want to call it. That's kind of how I imagine it. Now, I look at this, and the first thing I notice on the top here, very top, is revenue. So Jeremy, with his sophisticated analysis, is growing revenue every single year at exactly 32%. Now, I don't know about you, and like I said, I'm not a big individual stock investor, but I know nothing in the world grows this cleanly. And I can tell you, as Tesla matures and becomes a, more established automaker, a luxury automaker, their revenue is not going to grow at a flat 32% every single year. This is almost like the everything muddy model. As a matter of fact, it's almost exactly like it, obviously without a buy point. But you look at this and it's like, okay, so he thinks Tesla's revenue is going to grow at 32% every single year. So in 2023, he's going to have we're going to have $109 billion of revenue, then 143, 189, 250, all the way to $330 billion of revenue in 2027. Now, I scratch my head, because I look at this and I say, okay, Tesla's a luxury auto manufacturer. Who are they going to be selling these cars to? I mean, people, and the counter argument's like, oh, well, Tesla's, it's got some power stuff and, power wall, blah, 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 blah. No, Tesla is a car company. Shut up with your garbage. So how does Tesla compare to some companies right now? Because Jeremy thinks Tesla's going to be generating $330 billion of revenue in 2027. Well, a simple look at one of the largest auto manufacturers in the world, Toyota, they only generate $250 billion of revenue now. And if their revenue grows at, just a couple percentage points per year, I don't know. Are they going to be generating less revenue than Tesla? You mean to tell me a luxury auto manufacturer is going to be generating more revenue in just a couple years than one of the largest auto manufacturers in the world? And we could even go look at Apple. I mean, even Apple, this massive company that touches everybody's lives. I mean, basically everybody has Apple, right? Everybody has an iPhone. Everybody has an iPad, at least to my knowledge. I don't know, maybe I'm Richie. But you look at revenue here, and it's like, okay, so right now Apple has $400 billion of trailing 12-month revenue. This is a company that has products everywhere. Everybody can buy these. This isn't just like a luxury brand. This is Apple. This is everywhere. They have $394 billion of revenue. And Jeremy thinks that just in a few short years, Tesla is going to be catching up. And if you project these numbers out even more, they're going to quickly surpass in just a couple of years the revenue generated by Apple. I don't know if you believe that, but, whatever. So the next thing he has on here, and let's go ahead and pull up this calculator, if I can do that. I guess I can't do that. He has a profit margin for Tesla, a net income growth percentage of 32%. So let's find out the assumed profit margin of Tesla. So he's got 17 divided by 109. So he's saying that Tesla is going to have a 15% net income margin in 2023, and I assume that's going to be the same for the next couple of years. Well, I got a little concerns about that, okay? Number one, it's very, very simple economics. I'm not an economist. I am not an economist. But I know that as competition increases, margins come down, and there is a flurry of competition coming for Tesla. You think all these other automakers are just going to roll over and die, and all these other, budding EV companies are just all going to die, and Tesla's going to crush everything, and everybody's only going to buy a Tesla? You're a fool, you're wrong, and you're a fanatic. Competition is coming, and the more competition there is, the more margins get hurt. Second of all, Tesla has to eventually leave the luxury auto market in order to be competitive and to really dominate the world. And as we all know, the lower the model, the cheaper the brand, the less expensive the car, the less luxurious it is, the lower the profit margin. And on top of that, we can already see Tesla's cutting prices. And it's not just in the United States because of this upcoming tax credit with the Inflation Reduction Act. No, they're cutting prices everywhere. They cut prices in China, everywhere. If Tesla is cutting prices around the world, that's going to hurt margins. Okay, unless they've had this magical increase in, cost efficiencies and they're able to cut their production costs faster than they're cutting these prices of their cars. If that's the case, okay, maybe Tesla, will continue to have a 15% bottom line profit margin. But if they can't do that, which I highly doubt they are, their profit margins are going to shrink as well. So right now, the two fundamental assumptions underpinning this entire model are that Tesla's revenue is going to grow at an insane rate and basically overtake every other, automaker in the world in just a short couple of years, even though it's a luxury car company. And it's going to grow at a steady 32% every single year. I mean, it's really easy to go from $250 billion to $330 billion. That's just, $90 billion or $80 billion? That's easy to do in a year. Yeah, that's just, remember, that's a million cars right there. Tesla already generates, I think trailing 12 month was like $72 billion. So basically their entire revenue for the last trailing 12 months, they're going to have to replicate that again from 2026 to 2027 to basically get this 32% growth rate. Okay, you know what, Jeremy? Flat 32%. Net income is going to be 15% despite them cutting despite them cutting the prices of Tesla cars. And then he has all these assumptions, okay? Base case beliefs, auto sales grow each year around the world. ASPs stay consistent. Service grows consistent yearly. Yeah, that happens in the real world. Base case assumes energy business remains small revenue opportunity and assumes economy is weak some years with some years strong. Well, that's a really in-depth analysis. The economy is going to be weak in some years and strong in the other. But regardless, the revenue growth rate is going to be a flat 32%. Base case does not assume any meaningful revenue from robotaxi opportunity. Okay, that's reasonable. I would love to see his bull case. Let's look at the net income. Net income growth assumes Tesla will not make any significant progress on margins. Yeah, they're not. Their margins are going to shrink. Net income growth assumes Tesla does not have anything that harms profitability in any major way. No, this is the base case. No, there's not going to be competition. No, they're not slashing prices. Oh, no. And guess what? If they can't grow their sales as quickly as they are planning to, that factory overhead that they're going to have to cover is going to make their margins even lower. Tesla has proved the ability in the past to grow net income faster than revenue. This case assumes same rate of growth as revenue. Okay. So he kind of clarifies it. Important to note, all companies do not grow perfectly every year. Some years companies grow or shrink faster than expected depending on many factors. I run projections with consistent numbers since it is impossible to predict freak years of economic growth, recessions, and geopolitical issues. And that's the fundamental flaw of this whole freaking thing. Number one, even if he runs flat numbers, the assumptions are absolutely insane. Tesla's not going to have $330 billion of revenue by 2027. And number two, this just invalidates the whole model because if these numbers change at all, if one thing changes, this whole freaking thing is going to massively change in a massive way. So once again, Jeremy proves his massive incompetence, his massive stupidity. And since he bought Tesla recently, remember that? And now it's already crashed way more since he bought it. Be prepared for Tesla stock to get slain, because whenever this clown buys something, you know it's guaranteed to absolutely plummet by 60, 70, 80, even 90%. Tesla investors, I wish you the best of luck. I tried to warn you. You didn't listen to me. You listened to incompetent, disgusting scammers like Jeremy Lefebvre, and now you're going to be selling your butt. Good luck and have a wonderful day. Cheers!